All right, ladies and gentlemen, let's get her going here. Start me off. Where to bid to go? Have it like $1,000. Open it up.
Buying a home with bad credit and no down payment. Welcome back. I'm Ted Thomas. I've been involved in real estate my whole adult life. Now, my specialty is a subset of the traditional real estate. It's not very glamorous, however, it's lucrative and it's really abundant. Traditional real estate is single-family homes, residential buildable lots, small apartment buildings, small office buildings, and some small farms. My involvement in real estate is in the tax defaulted arena, and basically these properties have been defaulted on taxes by property owners. Now, it's the same property as traditional real estate. However, the major difference is the people have defaulted, and when they default, that causes some pretty big consequences at the local county and for the property owner. All right, so we're going to talk a little bit about that, but this episode is all about buying a home with bad credit and no down payment. So I'm going to give you a little insight into these bargain properties that sell at public auctions for 10 and 20 cents on the dollar with no mortgage or deed of trust, but I'll do that a little later on in this episode. I'll be right back. Today's episode is answering your question, buying a home with poor credit and maybe even no down payment. This one subject could really cover at least a dozen YouTube videos, that's for sure, and many blog posts, but I'll try to condense some of it so you get a basic understanding of it. Now, everyone wants a piece of the real estate market. The problem is a lot of people don't have the required down payment. So this is a big roadblock for newcomers and for people that just have a little bit of money. So there's lots of options, and there's really dozens of mortgage loans and lenders. Some of the loans are just great, and some of them are not so hot. So let's talk just a little bit about that. Now, the lenders do their best to accommodate the good credit clients. It's not so easy being creative for those who have low FICO credit scores. So we're going to talk a little bit about those credit scores. What do lenders do, and what do they consider bad credit? You need to know that. Now, generally, credit scores are pretty fixed, and the lenders follow the rules because they're very regimented and they want to have everything systematized and do everything the same all the time. So it's very unusual for them to modify their loans. Now, private lenders will modify their loans, but the institutions and the banks, they're not going to do a lot of modifications. So lending organizations, they generally send their loans to the government. In other words, they'll make a loan, they'll package the loan with 2 or 3 others, and they'll sell them to the government. Actually, the package of loans is the way the government wants to buy them and pay the bank back the money which they've already lent out. So that's going to be a very systematized business, all right? So let's talk about those credit scores. Now, these range from 300 to 850. So from 300 to 579, that's considered poor credit. From 580 to 669 is considered fair, all right? From 670 to 739 is considered very good. Now, all the lenders would like to have very good, but we're going to see that we can make a lot of money with people that don't have very good credit. So the best credit is 800 to 850, and that's considered exceptional. So let's think about this a little bit. The traditional lenders, which are going to be bank and institutions, they're going to want fair or better, or they're not going to lend money to anybody that wants to borrow. Most loans are sold to the government. The interest rate on the lower FICO credit scores will be higher than the interest rates for those that have exceptional credit. All right, so if your credit isn't so hot and you've got a low FICO score, you're going to have to pay more money. So I have a saying, I'm very fond of it. Getting the money is more important than the interest rate. Think about that a little bit. Getting the money is more important than the interest rate. Why do I say that? Because you can make the deal if you can get the money. If you can't get the money, you're not going to do it. So the money is more important than the interest rate to me. So private lenders might allow you to have flexible terms, make a down payment by paying extra money every single month until your down payment's in. But they're also going to say, all right, you want to do that? We're going to charge higher interest rates. So now the private lenders may be very receptive to making a different kind of loan, but they're going to charge more money. In other words, the monthly payments are going to be higher, but you're going to get in business. The key here is if you're don't have good credit, you've got to make the deal. So if you want to make the deal, you're going to have to accept some kind of different terms. The different terms are going to be, they'll give less money down payment, but you build in the down payment, and you're going to have to pay high interest rate. All right, so that means lower or no down payment to get started, higher interest rates, and higher monthly payments. Who has to pay that? Well, people that have poor FICO scores. If you got a poor credit score, you're going to have to pay more money to get your money. All right, now there's a lot of common questions they're asked. Is owner financing a good idea? For me, I'm going to tell you it is. We teach all of our clients to do as much owner financing as they can. Owner financing is the same as seller financing. Why? Because we can make more money on the deal, because we can get higher interest rates. We just have to wait to get the money. All right, now every owner is not going to make those kind of loans. Every owner is not going to do seller financing, no matter what you say. They're either going to sell the whole thing outright or they're not going to do it. Now, there's a lot of government programs. Some of them are really good, but most of them are pretty rigid regarding the down payment and the amount of credit score that you're going to have. So a person attempting to make a zero down payment, you're probably wasting your time going to a bank. They're not going to approve zero down payment on a loan. It's not going to happen. You're going to have to find a private lender to do that. All right. So if you're going to have to go to a mortgage holder or a mortgage lender, I should say, an institution, don't even apply for zero down, because they're just going to turn you down and you're going to have a rejection on your credit statement. All right. What are we covering today? We're talking about buying a home with bad credit and no down payment. Now, in many instances, the government does have no down payment loans. So what are those kind of loans? Well, those loans are going to require PMI. What is that? Private mortgage insurance. All right, that means the banker wants to get out of lending this loan because they don't like the credit. In other words, the credit isn't good enough. But some banks will make those loans, but they're going to require private mortgage insurance on it. That's going to take the rate up even higher. So think about what these people are paying. Some of them can't get approved at all because they just can't afford it. All right, so let's talk about a couple of alternatives. All right, now research is necessary. So some of the no down payment loans that can be made are government loans. What would that be? For example, the Veterans Administration. So that means you're going to have to be in the service or one of those things. Something good to check on, because the government will make them a loan. Also, the Department of Agriculture makes zero down payment loans for people that are willing to live in rural areas. All right, now, am I an expert on all this? No. My business is tax defaulted real estate, buying and reselling that. So let's talk about this tax defaulted real estate and see if we can get through that today. So the solution is, for the sellers, they're going to do seller financing, and when they do, they're going to keep the deed to the property, but they're going to create a contract of sale or an installment sale contract. All right, this is perfect for people that have FICO credit scores that are not very good. However, they need to be able to make their payments. So that means if they've been through a divorce, they've been through a bankruptcy or something like that, and they have a good job, they're going to be okay. Okay, we're not allowing seller financing where the people can't make the payments. They have to have a good job, they have to have been on the job for a while, and they have to show that they're going to be able to make the payment. If they can't do that, then we're not going to take them. But this is a way to get started with little or no down payment and have bad credit. So this is a large segment of the market. It's about 25% of the market has low FICO credit scores, and these people are in business. They want to be in business of buying property, and they can do it if they can find private sellers. So as I say, fully 25% of these people have already been rejected by a bank. All right, so let's cover how we do that, and do that relatively quickly. No one likes to get rejected on the loan. For example, a Wisconsin couple, after completing their training, shortly after they finished, they went to a tax defaulted auction, and they purchased a property at a public auction.
How better go there, how better go there, how better go where, how better go here, how better now, how better go.
Now, the treasurer and the tax collector had evaluated the property at $55,000. They were the high bidder at $8,000, and the property was valued at $55,000. Now, the mortgage and the deed of trust loan had already been wiped out by the treasurer, so it's canceled. So they bought a property for less than 20 cents on the dollar with no mortgage or deed of trust. The couple cleaned up the property, and then they used some pretty assertive marketing. Now, I don't have time on this particular video to go through all that marketing, but they sold the property relatively quickly between the Thanksgiving and Christmas holidays. They did that using seller financing. So the neighborhood properties were worth about $50,000 and more. The Wisconsin couple, they had $8,000 in their purchase price. They spent another $4,000 fixing it up. So they had a total investment of $12,000. So they had $12,000 and they advertised using, as I say, pretty assertive marketing, and they sold it on Facebook Marketplace. Their selling price was $35,000. Now you recall they had $12,000 invested, so they made $23,000. All right, now what are we even talking about today? We're talking about buying a home with bad credit and no down payment. Well, that's the buyer that showed up to want to buy the property. So that's what we're discussing here. Someone that wants a property, okay, has a good job, but they don't have a good FICO credit score. All right, so in this instance, they financed the property. And what did they do? When they financed the property, they allowed the new buyer to make a down payment by adding extra on the monthly payments to build into a down payment, and then they gave them 10-year financing. Well, on top of the $23,000 profit that they made on selling the property, they made another $15,000 to add to that, another $15,000 by lending these people money. So you're getting the idea. So what really happened here? $23,000 profit on the property, and then the installment sale generated another $15,000. They made $38,000 on one property. Not too bad for the first time right out of the chute. They did many properties after that. I've tested dozens of strategies and techniques, and I've sifted through all kinds of auctions. This works, and it works fastest to make big money by just doing the installment sale. Now, I'm not talking about a lot of theory here. This is a process. It's what's working best right now so you can get high income that all of you that are watching deserve. You see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. Small population counties will have dozens, sometimes hundreds of tax defaulted property. Large population counties will have hundreds, sometimes thousands of these properties to sell. All right, 2 mistakes that you want to make sure you avoid. Number 1, don't buy a property without looking at it. There could have been a fire. It could have been a hurricane. There could have been a flood. You don't want to buy without looking. You have to have boots on the ground. Second mistake is when you have those boots on the ground, figure out what your selling strategy is. I'm Ted Thomas. I'll see you on the next video. Don't forget, request your free auction list right below me.